everyone, here at Chris Capri, SecondSkiesForex.com. This is another video for you on YouTube here and on the Second Skies website. So this is a very simple strategy that I'd like to implement here and show you how to use. It's a really good strategy for getting into move after it's already had its first trending move. And so here we have this nice little, nice trending move on the Aussie dollar. This is the 2-hour chart. It's very impulsive, very consistent, mostly red candles. And usually trends like this do not have the type of one and done type situation where they just make one move and then they start to reverse. Usually they make a second attempt at the previous lows, whatever that low was, try and even actually gain some further ground. This is very common inside the institutional market. One thing I like to do is, after this move has already happened here, I start looking for a pullback, and I usually use a few EMAs, the 20, 25, and 30. It's kind of like a little gauge or a bandwidth here that this thing will probably struggle against. If it is going to legitimately reverse, then it should bust through these with ease. But if it's not going to reverse, or if it's not going to reverse past these things here, then usually what will happen is it will get stuck on these. It will get really stuck. And so what I'm looking for is, first, for price action, once it gets to these little EMAs here, to start stalling and stopping. That's the first thing I'm looking for. And then the second thing I'm looking for is one of these little things here, where I get a candle that rejects off of them, clears all three of them, and kind of engulfs the previous two candles. It gets impulsive all of a sudden, with all these corrective moves. When that usually happens, I will take the trade in the continuation of the original trend. And where will I start to target? What I will do is I will target the 0 point of the last leg. So if this was the down point here, then what I will do is target a move down there. I oftentimes will take profit about 75% of the way, or 2/3 of the way. And so what you can do is take a profit a little bit short of that. But what I usually like to do is go for the full gamut of this move here. And as we can see, thing just peters out and boom. And look where it stops at before it bounces again. The exact 0 point where it was before. This is a very, very common formation inside after a trending type move. Take another example here. So there's a nice drop off on the pound yen from 134, sub 130 here, and then it starts to bounce and it gets stuck. Here it rejects off of it, here it rejects off of it. Look how it starts to get stuck. Now it breaks through, but instead of falling through on that, it starts to reject back down. And it gets, it isn't able to follow through. And the market's saying, hey, we're not buying this here. We're expecting this thing to go back down. And so that's exactly what happens. And look what happens. It rejects off this one last time, and boom, starts to slam off and makes its way all the way back to the original point and actually goes way past it. So here was our 0 point. In other words, the point where this original trend had ended, and it makes its way back down here. This right here, by the way, is over 275 pips. So you can see the potency of those here. Here's a live example of one that I actually got in just a few hours ago on the euro sterling here. It's been selling off for quite a little bit here, 175 pips plus on the euro sterling, almost 200. And remember, this thing's 1.5 for 1, so we're talking about literally 250, 275 pips here. And then it starts to bounce, and again it has the same rounding type feel. And instead of the candles getting stronger as they go up, they get weaker as they go up. They start getting smaller, get stuck along these levels here, 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 and here. Take a look, it gets stuck here. And then all of a sudden it just can't make it past the 25 EMA, gets rejected at the 30 here. And then all of a sudden, look what happens, things start to sell off. So what I like to do is, once I get that little peaking rounding action, look for a candle to close just below that last EMA, the 20 EMA there, and then as soon as I get that boom, I'm in shorting it. And so I'm expecting this thing to head back down to 82.80, minimally down to 83.07, which is the S1 pivot for today. So we'll see how this one turns out, but it's a very, very simple method. Again, look for that rounding type action there. That's what we call a redistribution of the order flow. It's when we had a selling off, buyers come back in, and then they started off strong, but look what happens. As the thing gets closer and closer to these EMAs and gets stuck on them, it starts to change hands very gradually from, again, to the buyers to the sellers, who start to take control over the market. And the full taking control over the market again is when they start to get really impulsive candles and start to break back into new ground. Instead of the thing making new highs, it starts making new lows. So very, very simple technique. A great way to get in pullbacks, doesn't require any fibs, although you can use pivot points. This was nice that I was bouncing off these pivot points at the same time. And so just a very little simple technique to get into these moves. So I hope this helps here. And until then, if you have any questions or want to learn some more advanced rule-based systems, check out our courses. We have our Pro Forex course, which we just added 2 new systems to. We have our price action pivot point course, and we also have our advanced Ichimoku course. So feel free to check those out. Have any questions, email me, info@secondskies.com. Until then, good hunting, everyone.